First of all, then we're going to have a look at what are related parties, and it's if you control them, or if they're literally related, such as family, or you're under common control, or your significant influence. So things like subsidiaries, associates, they're all related parties. Directors tend to be related parties, and that sort of thing. So, moving on then, what does the auditor have to do? First of all, we need to find out that we've got all the related parties, that we know about them, that they're disclosed properly in the accounts. How do we go about doing that? Well, we look at prior year working papers. We look at and we speak to the management about how they go about identifying related parties themselves. We then look at shareholders' records and meetings. That will give us some related parties, and income tax returns. That will as well. Then there's other indicators. So if you see transactions on strange terms, so much lower credit terms or whatever it might be, then that's an indicator it might be a related party, or transactions with no apparent business logic, or where they're quite complex transactions where the substance is different to the form, non-routine, not usual for this sort of business, a lot of volume with just one person. All of these things, they all indicate that this could be a related party that hasn't been disclosed. So, risk of failure to disclose these related parties, what do we need to do? First of all, consider the risk of the material misstatement. Then ask management about it, and then try and understand their controls. Okay, and then once we've understood their controls and the risk that there may be related parties, then we can decide, right, how much procedures, how much substantive tests to do to try and have a look for these related parties. A couple of things then that I wanted to, well, this specifically in the syllabus. What if we find new related parties, okay, that we haven't been told about? Well, first of all, we get the management to identify all transactions with this new related party because they need disclosing properly. Then we need to ask them, look, why have these controls failed? You know, is it just error or is it fraud? We need to do appropriate substantive tests then to find out, to try and give us more evidence, and then reappraise the risk that there may be more related parties that we don't know about. And if we think it was intentional, then we have to think of the effect on the audit as a whole and the riskiness of the audit as a whole, because all the management representations can no longer be relied upon. Next, we're going to look at big related party dealings outside of the normal business. If we find these, what are we going to do? First of all, our big question is, look, is this for fraud? So we need to ask management, what's it about? Have a look at the contracts. Are they consistent with what the management says? Have all the transactions been authorised by proper personnel?